Hello viewers, welcome to the Let Learn It If You Can channel. So before starting the sessions, please like and subscribe the channel and click on bell icon for further updation. Okay, so in this sessions we're going to be solve problems on income from taxable income from assessment of firm. So we already discussed the in previous lecturing classes and all how to compute in the taxable income from assessment of firm, and also we already discussed solve the too many problems on income from assessment of firm up to 5 problems. In these sessions we're going to be solve the few more problems, that is problem number 6. So in this problem you're going to be learn new things is nothing but you're going to be how to preparing the taxable income under the assessment of partner. Okay, so we're going to be prepare separate account for the income from partners. Okay, so let's start the sessions. Problem number 6. So problem on calculation of taxable income of the firm as well as partners. So there are three partners is there in this firm. One is Ashok, Babu and Chandru are the partners in a firm with a equal shares they are invested, and the profit and loss account for the year ended 31st March 2018 shows the profit of 42,000 rupees after debiting the following items. Okay, so whatever the item has been provided, so they are earning the profit of 42,000 after debiting certain items like salary, commission and bonus they given. So keep in mind, whatever the salary, commission and bonus received by the partner is not taxable under the income from salary, because there is in order to impose any kind of tax on income from salary, we have to be satisfied one condition, that is employer and employee relationship. But if it is comes to the partner relationship as a partnership firm, so there is no employer employee relationship will going to be identifiable. So that's why whatever the salary, commission and bonus is received by the partner is a taxable under the income from business rather than income from salary. Okay, so we're going to be whatever the salary, commission and bonus is commission is received, so it is a will going to be treated as non-business expenses, and it is also taxable under income from business point of view. So we have to be add back to the when you are calculating the book profit under assessment of firm. Okay, so first one, they provided salary of 74,000 each to Ashok and Babu. So don't write directly about Ashok and Babu as a non-business expenses, only 74,000 each they provided. So you have to write 74,000 Ashok and 70,000 for Babu. Okay, and bonus to Chandru is 68,000 is provided, and commission is 19,000, 20,000, 45,000 respectively. That means Ashok is receiving 19,000, Babu is receiving 20,000, and Chandru is receiving 45,000 commission on that. So we're going to be considered as a non-business expenses all this one, and we have to be add back to the net profit. And interest and capital 15% they provided, I already discussed in the previous lecturing classes. So whatever the interest and capital is received by the firm up to 12% is not taxable, it is considered as a business expenses. If it is a exceeding 12% is considered as a non-business expenses, we're going to be computing the taxable income on that. So up to 12% is taxable in the hands of the partner. Okay, if it is excess of 12% is received by the partner, it is exempted. Up to 12% is taxable in the hands of the partner, but up to excess of 12% is taxable in the hands of the firm, and up to 12% is not taxable under the income from assessment of firm account. Okay, because it is considered as business expenses only. So whatever the 15% is given, so 3% is taxable in the hands of the firm and 12% is taxable in the hands of the partner. So this is the explanation for the problem. So assuming that all are the working partner and they are fulfilling the condition under section 184, so they are fulfilling, all are working partner as well as they fulfilling the condition under section 184 is nothing but they are eligible to claim deduction under section 40 class B under the book profit. Okay, so computing the taxable income of the firm as well as the partners account. So we're going to be see the solution for this problem. Okay, so this is a solution for the problem, that is first computing the taxable income of the firm. First we have to be write net profit as per profit and loss account 42,000 has been provided, and add inadmissible expenses or non-business expenses has been provided. So we have to be add salary, bonus and commission. I already given the reason also why we have to add back as a non-business expenses. Add all these things, and interest and capital. So we are preparing the firm's account up to 12% is taxable in the firm account. So that is how much is excess they are paying, how much is interest and capital is paying 15%, right? So excess, how much is a 12% excess, they're paying 3%. Okay, so 3 by 15 is a taxable under the income from firm account. So Ashok is 45,000 into 3 by 15, Babu is a 65,000 into 3 by 15, and Chandru is a 15,000 into 3 by 15. So calculate, you're going to get 9,000, 1,300 and 3,000 rupees. Add all this, so no other non-business expenses has been provided in the problem. So add all the amounts, you're going to be get 3,13,300 rupees as a non-business expenses, add to the net profit, you're going to get 42,000 plus 3 lakh 13,300 rupees. You're going to get book profit as a 3,55,300 rupees. So in the problem they are telling that, so the partners has been satisfying the section 184 as well as 40 class B. So that's why all partners are the working partner. So we can assume that they are satisfying all the conditions, so they are eligible to claim deduction under section 40 class B. So first one, under section 40 class B, you're going to be get two things. One is actual remuneration paid and maximum remuneration allowed. So first, actual remuneration paid, it includes three things. One is commission, bonus and salary. So whatever they received by the partner, so add all the amounts, whatever the salary, commission and bonus they are receiving. So salary is 74,000 plus 74,000, bonus is 68,000, commission is 19,000 plus 20,000 plus 45,000. If you add all these amounts, so you're going to get so if you add all these amounts, you're going to get actual remuneration paid is 3 lakh rupees, and maximum remuneration allowed we have to be calculate separately. Maximum remuneration allowed is working note 1. So how to computing is nothing but we are already shown here. So first 3 lakh of book profit we have to calculate 1,50,000, or 90% of 3 lakh, whichever is high we have to take into consideration. If whichever is high means you will going to get 2,70,000, and balance of book profit, how much is the book profit is earned by the firm in the book profit, 3,55,300, right? So we have to calculate 3,55,000 minus 3 lakh. Why? Because we already calculated 3 lakh on 90%, right? So subtract that one, remaining amount is 55,300 into 60%, we have to calculate on that amount. So okay, if you calculate, you're going to get 33,180. So add both the amount, you're going to get 3,03,180 rupees. And so this is the maximum remuneration allowed. So write that one under main format. So 3,03,180. So whichever is less we have to take. Actual remuneration paid, maximum remuneration allowed. Whichever is less we have to take here. Which one is a less here? 3 lakh only, right? So taxable income of the firm is 55,300 rupees. So this is the taxable income of the firm. In the problem, they are not only asked to computing the taxable income of the firm. So they are also asked the taxable income, computing the taxable income of the partner also. So what and all partner will going to be receive? The partner will going to be receive, one is interest and capital, and any kind of remuneration you will going to be received. So first calculate interest and capital. I already explained, in the hands of the partner, whatever the interest and capital is received, up to 12% is taxable. So calculate, so up to 12%. So 45,000 they are receiving the interest and capital. So how much is taxable in the hands of the partner? 12%, right? So whatever the interest is provided in the problem, 15%, 12 by 15. So 6,500 into 12 by 15, 15,000 into 12 by 15. So calculate, you will going to get the amount. Next one is maximum remuneration allowed. So very important you have to be keep in mind is that, so whenever the maximum remuneration is allowed here, whichever is less, if you are computing actual remuneration paid has come as a maximum actual remuneration come as a whichever is less amount means 3 lakh. So you can write whatever the problem remuneration has been provided, that amount only will going to write it. But in certain cases, if the maximum remuneration allowed will going to be get as a less amount, okay, so if it is this amount, if it is get as a if this amount, if it is get as a less amount, so then you have to be computing the distribute according to the profit sharing ratio or partners sharing ratio. We're going to be see in this problem we are getting actual remuneration paid only. In the next problem we're going to be see if actual remuneration, maximum remuneration allowed, if it is come as a less, and at that time how to distribute the remuneration. So here 3 lakh only they are receiving actual remuneration pay. So we will going to write that one. So Mr. Ashok is receiving salary as well as the commission. So add both the amount here, and Babu is also receiving salary and commission. Add both the amount, and Chandru is receiving bonus as well as commission. Add that amount, you're going to get taxable income of the partner of the firm is 1,29,000 by Ashok, and Babu is 99,200, and Chandru is 1,25,000. So this is a solution for the problem. So if any queries, any doubts, you can free to ask. So thank you so much, and have a nice day. Hello viewers, welcome to the Let Learn It If You Can channel. So before starting the sessions, please subscribe our channel and like it, and click on bell icon for further updation. Okay, so let's start the sessions. In this problem we're going to be see the how to compute in the taxable income of the firm as well as partners. So it is very similar to the last problem number 6. Okay, but here we're going to be see how to distributing the remuneration to the partner in this problem. Okay, so let's start the sessions. So the problem on calculation of taxable income of the firm as well as firm account, partners account, we have to be prepared. So Ashok, Babu and Chandru are the partners in a firm, are the equal shares. The profit and loss account for the year ended 31st March 2019, they provided 42,000 rupees. Okay, so So profit they provided 42,300 rupees after debiting the following information. So salary has been provided, bonus is provided, and commission is provided. I already tell the reason also why it is taxable under the income from business. We all these three will going to be considered as a non-business expenses. We have to be add back to the net profit when you are calculating. And third point has been provided, interest on capital 15% has been provided, and this one also I explained in last session also. So up to 12% is taxable in the hands of the partner, and excess of 12% is taxable in the hands of the firm. Okay, so whatever the firm, how much is the excess is paying that one, so they're paying 3%. So 3% is taxable in the hands of the firm, and 12% is taxable in the hands of the partner. Okay, and assuming that all the partners are working partners, and they are fulfilling all the condition under section 184 and computing the taxable income of the firm as well as taxable income of the partner. Okay, this is a problem they provided. So let's see the solution for the problem. So the computing the taxable income of the firm account will going to be prepared first. So net profit as per profit and loss account is 42,300 rupees has been provided. Add inadmissible expenses or non-business expenses is given in the problem is one, they are receiving the salary, bonus and commission. All are considered as a non-business expenses. Why? Because it is not taxable under the income from salary. It is taxable income of the taxable income under income from business, because there is no relationship between the employer and employee, relationship between employer and employee relationship under income from salary. So that's why under the partnership form, so that's why it is taxable under income from the business point of view. Okay, so add all the item, you're going to be get that is salary. Ashok and Babu is receiving 74,000 each is provided in the problem. So 74,000 each means Babu is 74,000 and Ashok is 74,000 rupees. And bonus to Chandru has provided 68,000, and commission to partners is 19,000, 20,000 and 45,000 has been provided in the problem. So next one is interest on capital. So interest on capital, how much is provided in the problem? That is 15% has been provided at 4,500, 6,000 and 15,000 to Babu, Ashok and Chandru. So I already explained, we are preparing now firm's account. So up to excess of 12% is taxable in the firm account. So calculate 4,500 into 3 by 15. Babu is 6,000 into 3 by 15, and Chandru is 15,000 into 3 by 15. So add all the amount, you're going to get inadmissible expenses, add it to the net profit, you're going to get 3,47,400 as a book profit. So in the problem they are telling that all the partners are satisfied under section 184 as well as so all are the working partners. So we can claim the deduction under section 40 class B as a deduction. Under section 40 class B, we're going to be get two things. One is maximum remuneration allowed and actual remuneration paid. So first write actual remuneration paid. So I already explained actual remuneration paid, it includes three things. One is commission, bonus as well as salary. So add all the amount, whatever the salary, so whatever the salary they are earning. Okay, so that is we have to add a salary part, bonus part and commission part. So add, you're going to get 3 lakh as a actual remuneration paid, and maximum remuneration allowed we have to calculate working note 1, maximum remuneration allowed, how much is a book profit they are earning, 2 lakh 3,47,400 rupees. On that amount we have to calculate the maximum remuneration allowed. So let's see the how to calculate the maximum remuneration allowed. So up to 3 lakh rupees, first 3 lakh rupees of the book profit we have to calculate 1,50,000 or 90% of 3 lakh, you're going to get 2,70,000, whichever is I we have to take under here. So whichever is I means whichever is I out of these three things is 2,70,000 only we will going to get. So balance of the book profit is how much is the book profit they are earning in the firm account, 3,47,400 rupees, right? So out of which 3 lakh rupees I already calculated, so subtract that amount. So you're going to get 47,000 400 rupees. On that 60% you have to calculate it, you're going to get 28,440. So add both the amount, you're going to get 2,98,440 rupees. Okay, so add write that amount under the format, that is 2,98,440. whichever is less we have to take in a year. Okay, so whichever is the less out of these two things, okay, out of these two things is whichever is less means 2,98,440 only. So subtract that amount from the book profit, you're going to get taxable income of the firm is 48,960 rupees. Okay, so this is the taxable income of the firm. So if the in the problem, if they are not asked how to compute in the tax liability, if they are asked tax liability 30% plus 4% health and educational will going to be calculated here. Okay, so let's see the how to compute in the, and one more they asked in the problem, computing the taxable income of the partner account. So let's see the solution for the how to prepare in the partners account. Okay, So let's see the partners account how to prepare. So let's see computation of income from partners of the firm. So interest on capital I already explained, up to 12% is taxable under the income from partners account in the hands of the partner. So write 4,500 into 12 by 15, 6,000 into 12 by 15, and 15,000 into 12 by 15. So you're going to get 3,600, 4,800, and 12,000 rupees. And here very important, remuneration to the partner. So we got under the problem as a, when you are calculating here, when you are calculating both of this, comparing it, whichever is less we got as a maximum remuneration allowed. So we have to distribute this remuneration to the partner. So how we are going to be distribute to the partner? In the problem they are not provided anything. So here they are telling all of the partners are equally they invested in the firm, but they are not specified profit sharing ratio. At that time, how to distribute this remuneration is nothing but based on remuneration ratio. So then how to compute in the remuneration ratios are? So we will going to be calculated like this. So let's take these particulars Ashok, Babu, and Chandru. So on this, Ashok is receiving the salary of 74,000, Babu is receiving 74,000, Chandru is not receiving any kind of salary, rated as nil only. Bonus, only Chandru is receiving 78,000, and commission all are receiving 19,000, 20,000, and 45,000. Add all the amount, you're going to get that is 93,000, and this one is 94,000, and this one is 1,13,000. So cancel all the three zeros, you're going to get ratio 1 ratio 93 is to 94 is to 113. So based on this ratio, we're going to be distribute the remuneration to the partners now. So calculate remuneration to the partners now. So remuneration how much is provided? So actual remuneration is 2,98,440 has been allowed to the deduction under section 40 class B. So this remuneration we have to be distributed to the partners now. 2,98,440. How much is the ratio of the Ashok? 93, right? 93 divided by 300. How we got 300? So add all these three things. Okay, 93 plus 94 plus 113, you're going to get as a 300 as a ratio. Okay, so calculate, you're going to get 92,516. Similar to Babu, Chandru calculate like this also. Babu ratio is 94 and Chandru ratio is 113. So calculated, you're going to get remuneration to the partners distributed. And finally, taxable income of the partner is Ashok is 96,116, and Babu is 98,312, and Chandru is 1,24,412. So this is how we're going to be distribute the taxable income of the partner. So this is so in this problem we got we learn one more thing is how to distributing the remuneration to the partner when actual maximum remuneration allowed we got as a less amount. Okay, so when we got as a maximum remuneration as a less, at that time we have to be distribute according to the remuneration ratio. How to compute in the remuneration ratio? Like this. Okay, we already calculated. So based on this, we'll calculate the ratio, then we'll going to distribute the remuneration to the partners under the partners account. So this is a solution for the problem. So if any queries, if any doubt, please free to ask. So thank you for watching. So have a nice day. Hello viewers. Okay, let's see the one more problem under assessment of firm. So it is very simple, no other trick is not provided in this problem. Okay, let's see the problem. So Sri Ram and Raghuram are the working partners. So they are both are working partners, so they are eligible to claim under section 40 class B from the book profit. Okay, so are the professional of the firm which satisfies all the condition under section 184 as well as 40 class B. So we have to be deduction, they are eligible to claim under section deduction under section 40 class B under the book profit. Okay, so they are sharing the profit and loss in the ratio of 4:1. They provided the profit and loss account has been provided. So let's see the profit and loss account. So in the debit side we have to be identify which one is a business expense, which one is a non-business expense. Business expense, ignore it, they already recorded. It is a non-business expense, we're going to be add back to the net profit because it is not related to your business. And credit side, if it is a business income or non-business income, if it is provided, business income ignore it, non-business income we have to be deducted because it is not related to your business income, as well as adjustment we are going to be look into it. So let's start the problem. So general expenses is related to an business only, so ignore it. Interest on share capital to the partner, so in this they are not provided the percentage whether it is excess of 12% or below 12%. So but in the adjustment they provided one adjustment, so we're going to be see when I come to the adjustment we're going to be explained there. Donation to NDF, National Defense Fund, is provided. I already explained donation and any kind of charities, if it is provided, it is considered as a non-business expenses to add back to the net profit. Salary, bonus and commission, remuneration to the partners, so it is a obviously it is a taxable under income from firm as well as business, so add back to the non-business expenses to the net profit for calculation of taxable income. And depreciation, it is provided under P&L account as well as adjustment, so whatever the P&L account provided under P&L account, add back as a non-business expenses, and whatever the adjustment is provided as a depreciation, deduct as a business expenses. Okay, and next come to the adjustment. So general expenses to the extent 18,500 is not deductible. So general expenses related to business expenses only, but they are not deducted, they are not shown in the P&L account. So that's why we have to be add back to the net profit, because it is eligible to claim as a, it is eligible to compute in the taxable income. So that's why 18,500 rupees will going to be add back as a non-business expenses. Next one is interest and capital to the partners in excess of 15,000 as provided. So in excess of 15,000, excess of amount will going to be taxable where? Under the income from firm, not by the income from partner. Income from for partner, it is a some extent, up to some extent is taxable, up to some extent means 12% is taxable. If it is excess of that amount is they're paying, it is taxable under the firm account, right? So this for 15,000 is taxable under the income from firm, so we have to be add back this 15,000 as a non-business expenses. And depreciation has been provided. So this is a explanation for the problem. So let's see the solution for this problem. So whatever the profit has been provided is problem is 1,12,000. Add non-business expenses. One is donation has been provided, salary, bonus, remuneration has been provided, depreciation added, general expenses added because they are not shown in the P&L account. So that's why we have to be add back because it is eligible to pay the compute in the taxable income. And interest on capital excess amount, how much is paying in the problem, that is 15,000. It is provided in the problem, that is they are telling interest on capital to the partner is excess of 15,000. So this way it is considered as a non-business expenses, so it is taxable under the in the hands of the partner firm. Okay, so that's why we will going to add back as a 15,000 rupees. Add all these things, so no other non-business expenses has been provided, so add all this, you will going to get 3,73,500 rupees as a non-business expenses, and add to the net profit, you're going to get 4,75,500 rupees, and that one admissible expenses has been provided, one that is depreciation. So deduct that one, you're going to get book profit as a 4,43,000 rupees. And they are telling in the problem they are satisfy all the condition under section 184 as well as all are working partner. So that's why they are eligible to claim deduction under section 40 class B. So let's see under section 40 class B, two things will come. One is the maximum remuneration allowed and actual remuneration paid. So first of all, we will going to write actual remuneration paid. Actual remuneration paid, it includes three things. One is commission, bonus and salary. So they directly provided in the problem, that is no need to add all these things. So 2,85,000 will going to be actual remuneration paid, and maximum remuneration allowed we have to calculate working note 1. How much is the book profit they are receiving? 4,43,000, right? On that amount you have to calculate maximum remuneration allowed. So first 3 lakh of the book profit you will going to calculate like this. One is 1,50,000 or 90% of 3 lakh means 2,70,000 you will going to get. Whichever is high we have to take into consideration. Which one is high compared to these two amount, that is 2,70,000 only, right? So write that amount here. And balance of book profit is that is how much is a book profit they are earning. So that is 4,43,000 earning the book profit. Out of this 3 lakh we already calculated the tax, so subtract that amount, you're going to get balance amount as a 1,43,000 into 60% you have to calculate on that amount. You're going to get 85,800 rupees. Add both the amount, you're going to get taxable income of the firm is maximum remuneration already is 3,55,800 rupees. So write that one under the main column, that is maximum remuneration allowed working note 1, 3,55,800. So out of these two we have to calculate whichever is less amount. Which one is a less here? So 2,85,500 we have to subtract from the book profit. So taxable income of the firm is 1,58,000 rupees. On this income you will going to calculate the tax liability if they asked in the problem. In this problem they are not asked. So if they ask, we have to calculate 30% as well as 4% health and educational cess. Okay, hope you understood the problem. So if any queries or any doubts, you can free to ask and put it in your comment box. Okay, so thank you, have a nice day.